Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on? Well, the markets are kind of looking for direction, right? Now, I do think we're going to push it up to a new record high. Now, the reason I think that is because you can look at the bond market. Look at the HYG. Look at the junk bonds. Those are right at a record high right now, right? Now, those start to free fall. Run for the hills. But that market is telling us that they're still pumping liquidity into this marketplace, and they're going to be stock buybacks, which is going to push this up higher and higher and higher. We're going to hit new record highs. It's inevitable. We may get a pullback first. I get that. But we're not going to come back and take out the recent low. No, we may get a pullback and then head higher, but we're going to get to new record highs before the big rug pull. It's going to be the biggest rug pull of my lifetime, of your lifetime, of anybody's, right? I mean, there's a crisis coming, and that's what I want to talk a little bit about today. How much time do we have before the crisis hits? Now, I don't think we have 10 years, and it's just a math equation at this point. Look at, you got $37 trillion in debt right now, okay? And the Donald, he doesn't want to stop spending. He's going to keep spending. Big, beautiful bill's going to add $5 trillion to that. But 37 trillion in debt right now, and we're printing an extra 2 to 4 trillion every year, 2 to 4 trillion, right? And if we go into a recession, that number is going to jump up to 6 to 8 trillion, right? I mean, they're going to flood the market with new liquidity when we hit the recession. But in the next 10 years, you're going to double the amount of debt just at the pace we're on, right? Nobody wants to stop spending. Nobody can stop spending. We're going to continue on. Look, you can't cut Medicare. You can't cut Social Security. You can't cut defense. Now, eventually, all those will get cut, but right now, that's not politically correct. Nobody can do it, so we're going to have to continue to spend, and that's what's happening right now. So we go from 37 trillion, let's just call it rough numbers, $75 trillion, right? Now, right now, it's taking $1.2 trillion every year just to pay the interest on the 37 trillion, right? On the 37 trillion, our interest budget is 1.2 trillion a year. Okay, well, that's one out of every $4 that the government takes in goes to paying off the debt. It goes to paying off, to paying the interest, not paying off the debt. The debt is never, ever, ever going to get paid off. It goes to pay the interest on the debt, one out of every $4. Now, 10 years from now, we're going to be twice as much in debt. So it's going to take half of every dollar that comes in is going to go to pay the interest on the debt. So half of the money is going to be gone, and they're going to try to run the government with what's left over, but we're going to continue to go up and up. Now, I don't think we have 10 years left, but here's the thing. You see, there's no way out. A lot of people say, but Mike, we can grow our way out. We got AI coming, Mike. We're going to grow our way out of this. Look, it's impossible to grow your way out when you got the interest payment being half of the tax money coming in just going to interest. It really is a drag on the economy. You're not going to grow your way out. Now, what they're going to do is they're going to hyperinflate the way out because of this debt spiral that we're in, right? More and more debt. Eventually, you're going to have to pay it back with worthless dollars. And those worthless dollars will come in the form of, hyperinflation. Now, here's the thing. This is just Rick Rule. Okay, Rick Rule, he's a smart guy, big investor guy. Now, he says that just doing common sense, common math, right? We'll go from 37 trillion to 75 trillion. He says the purchasing power of the dollar in the next 10 years will lose 75%. 75%. That happened back in the 1970s, that when you had all that inflation back then, the dollar lost 75%. You see, what happened in the 70s was in 71, they took us off the gold standard, right? And since they took us off the gold standard, gold was $35. Technically 41, I guess, is what they revalued it to. But anyways, let's just call it 35 rough numbers, and we're about 3,500. So you lost 99% of your purchasing power compared to real money, right? When they took us off the gold standard. Didn't take us off the gold standard, this would have never happened, right? Now, I do believe when the reset comes, that gold will play a role in this number. But you see, what's going to happen is they're going to hyperinflate. So we've lost 99% since 71. Okay, since 1980, we've lost 75%. Just in the last 5 years, you can tell your money has lost 25%. Now, what this tells me is that the pace of your money losing value, it's accelerating quicker and quicker and quicker. Pretty soon the dollar will go away. It'll become worthless. There will be a reset and gold will play some function to reset. But Mike, we got Bitcoin now. Bitcoin's going to be the reset. Well, good luck with that. You do you, I'll do me. Gold's going to be part of the reset. Probably reset to a gold standard again. But Mike, there's not enough gold for everybody. Not at these prices. The price of gold will have to go up, probably $20,000, $30,000, $40,000 an ounce. Some people are calling for as high as $140,000 an ounce. It's possible, but I don't think it will be quite that high. But so you lose 75% of your purchasing power in the next 10 years. If we can make it 10 years, I don't think we have 3 years left. This is just a hypothetical. If we go 10 years, you lose 75% of your purchasing power. Now, people my age, we get on Social Security, right? Maybe we get $2,000 in Social Security and we can squeak by a meager living, right? Going out to the rest of our life. And a lot of people my age, that's all they have is their Social Security. They depend on that. They need that to survive. But you see, it's going to lose 75% of its purchasing power. So they get $2,000 a day, but 10 years from now, it'll be like getting $500, right? And most people cannot survive on $500 a month. Impossible. So you're going to have a big, well, retirement crisis, let's call it, a pension crisis, a Social Security crisis, but you're going to have a lot of senior citizens in the homeless category. Now, granted, when a senior citizen becomes homeless, very difficult to live outdoors when you're a senior citizen. Most of them will die off, and that's probably what they want, so they don't have to pay them that Social Security anymore. But you see, gold is going to play part of the reset. That's what you need to protect yourself. I tell people, people don't listen to me. That's okay. I understand. I'm just a boomer. Yes, I have a microphone. Yes, I'm a boomer. Both true. Anyways, you're listening to me now. Don't make your own decisions. You have a mind. Use your mind, right? But gold is going to play a part of the reset. So why not protect yourself? But Mike, gold's at a record high. We're talking $3,000. I can't afford gold up here. Look, at gold is cheap. When $3,000, you're going to regret not buying it here because it's going to hit $30,000, right? Like I have a lot of regrets not buying it at 300. You know, 300, I could have bought more. Now at I'm paying over 3,000, right? See, I have that regret. Now, if you can't afford gold, silver is the real play here. You're going to look back on this and say, wow, I should have bought silver when it was $30. It's going to be over $300, right? It's going to 10x from here probably in the next 10 years. So you'll be looking back, oh man, if I'd listened to Tall Mike, I'd be sitting pretty. Well, you can. You can go out there, buy an ounce a week, buy 2 ounces a week, whatever you can afford. Silver, the cheapest asset on the planet. Now, it does crack me up. It cracks me up when I listen to these financial analysts. I listen to one, and I get obsessed with this stuff. I hope you guys get a little bit obsessed, right? You listen to Tall Mike, you must be a little obsessed. Well, anyways, I get obsessed with this. I listen to these guys, right? These analysts. So this guy's calling for the stock market to drop between 60 and 80%. And he's saying this is going to suck gold down with it by about 40%. Going to suck the gold right down with it. Well, in 2008 is what he's comparing it to. In 2008, gold came right down with it. But you see, in 2008, it was more a retail person selling his gold because that's what brought the gold price down, right? He sold off his gold to meet his margin calls on his stocks because the stocks were free falling. So this guy says when the stocks free fall this time, 60 to 80% of the stock market. And I could see that happen. That makes sense, right? I mean, we're way inflated. 16-year bull run without a pullback pretty much. We're going to have the biggest pullback you've ever seen. You young people, you've never seen a bear market. It's really fun. Love trading bear markets because they go down so quick. Okay, all right. But anyways, so he's saying gold's going to drop down to 2,000, 2,200 because it's going to get sucked down. But then as I was listening to him, the interviewer, they asked him the question, well, is the retail investor in gold right now? And the guy goes, well, no, it's just central banks. Central banks are buying all they can get. Why are they buying it? Well, because it's a tier one asset. They no longer want to hold our dollars. They no longer want our bonds. The only other tier one asset would be cash or gold. Gold is now a tier one asset. So the central banks are buying it hand over fist, right? So you don't even have the retail investor involved in gold. So gold is not going to get sucked down this time. Look at if it goes down to $2,000 an ounce, there's not going to be any physical gold to buy. Maybe they can slam the paper price down. Maybe they can slam the GLD down. I could see the GLD going no bid, right? I mean, it could go straight where nobody's buying it, and I could see physical gold where no one's selling it. So no one's going to be buying the paper, but nobody's going to be selling the physical. So they're going to tell you, well, the gold price is really down here at $100 because there's no buyer for the GLD anymore. Look, you want to have physical. You don't hold it, you don't own it. It's that simple, right? And when the crisis hits, you're going to be wanting to hold some of this. You're going to be wanting to have some real money, some silver that you can go out and barter with, some gold that you can store your wealth in. Look, you can take your chance on that Bitcoin, but I'm telling you, if the market comes down 60 to 80%, Bitcoin may completely disappear. Just my opinion. I don't want it to. I love Bitcoin. I really hope they don't take that Ethereum away. That's having its day. You know, it's down about 80% from where they went public on those ETFs, but now we're bouncing back, right? Okay, I like that. But you see, you're going to have a reset coming, and the reset's going to involve gold. Why is it going to involve gold, Tom Mike? Because nobody has confidence in the dollar anymore. Yes, they're going to bring out a central bank digital currency, right? But that's just a dollar that's digital. Nobody's going to have confidence in that. So eventually to get the confidence back, they're going to have gold as part of the system again. That's the only way you're going to get the confidence back into the system. So gold is going to play a big role in here at the $3,000 level, a little above it. You might want to pick some up just so you can be in the game, just so you can be a player, just so you can protect your family, protect your assets. Look at it as insurance, right? I mean, you got car insurance, don't you? Well, maybe put, 10% of your portfolio in gold. Insure your portfolio because that portfolio could disappear really quickly. Even you got some Bitcoiners that are actually getting smart now. They're taking part of their profits. Bitcoin's had a great run up and they're going into gold. They're going into the real money. They see it. They want to protect it. They look at it as insurance. Maybe Bitcoin goes away, but maybe gold keeps going up. Look at it. It's just a shot, right? A lot of people are doing that. People don't believe that. It's actually true. I know several of them. But people want to have real money. They want to have hard assets. Things are changing, and they're changing very rapidly. When the reset happens, it's going to, it's not going to be like weeks and months. It's going to happen like overnight. They're going to come out, and maybe the U.S. comes out and says, hey, we're going to revalue gold at $20,000 right now. Well, we'll pay $20,000 for any gold you got, right? And they'll sell you $20,000, and gold will then be at $20,000. They can reset the price of it because they own it, right? Well, they say they own it. Well, that's another funny thing I want to talk about. Look, you remember when Elon, he got together with the Donald and they were all tight, all friends? I think they kind of broke up. I'm not even sure they like each other anymore. But anyway, they used to be really close, right? They were going to drive over Fort Knox. They were going to bring video crews out there. They were going to film the audit. You ever know? Not even talking about that anymore. How come? Why? Well, because there's cobwebs there. We don't have the gold. Look, they're trying to replenish it as quickly as they can. Somebody's buying gold off of the COMEX right now, right? They're buying gold off of the COMEX and taking delivery, and it's going to break the COMEX. Now, maybe some people say this is China doing it. Now, if China really wanted to do it, it would take less than $10 billion, right? China came in and bought $10 billion worth of gold for delivery. That would be a default on the COMEX. It would be an act of war, right? I mean, that would be an act of war if they came in and broke the COMEX exchange. So they're not doing that, right? What are they doing? They're having their citizens do it. They're having the billions and billions of, how many billions are there in China? The citizens, a billion people going out and buying gold. They tell their citizens to buy gold. So the citizens are doing the evil work for China instead of China just coming over to the COMEX exchange, buying $10 billion and say, yeah, we'd like to take delivery of that. COMEX doesn't have that. They don't have the gold. Not enough gold. It's not physical, right? They have paper gold. Hey, will you take some GLD? No, we want the physical. But China can't do that. That's an act of war, and I get that. But they're having their citizens buy as much as they can afford, and that's what's driving up the price of gold also, right? I mean, this is very fascinating times we live in. If you like this stuff, give me the thumbs up, punch the subscribe button, get out there, everybody. Have a great day, and we'll talk again real soon. Bye-bye now.